Welcome to the Investor Coaching Show. Here's your host, Paul Winkler.
You guys are cracking me up. Welcome to the Investor Coaching Show.
What happened?
Paul Winkler. Well, no, so the music starts to play, right? And I've got this air band.
I didn't think you were even paying attention to
I was
us.
totally paying attention. I was trying not to desperately.
Well, you know, it's a holiday weekend, so we're in the partying spirit.
You guys apparently
I'll always
are.
play air drums.
We're just enjoying
Oh
our
my
freedom
gosh.
on a gorgeous day.
Yes, you know, it is a good, Memorial Day. Thanks to all the veterans, and amongst Evan is amongst them here in the studio with us.
It's a privilege.
Yes,
And,
yeah, my
blessings
dad,
to
my
the people
father-in-law.
that lost family in the service as well, which is really what we observed this weekend.
Yes. We take that for granted, but I just think about around the world, what makes capitalism work is
Yeah.
and I like to reiterate this every once in a while because I think it's so important, is some strange person to you, not strange person, but strange to you,
Right.
don't know this person, is willing to protect your right to own property,
Yep.
to protect your right, to freedom, and to defend you, even though they don't know you from Adam, but they're willing to do that. And I think that is a huge thing that we forget. If we look at countries around the world in which capitalism does not flourish, it is nobody protecting necessarily people's property rights. You look at
Right.
different countries around the world, such as, India's up and coming, but you don't have that same. You have corruption.
Right.
And you have corruption, unfortunately, you'll have it everywhere. No matter where, you're going to have bad things everywhere. But it is just something that I don't think we need to forget, that our police force, military, all of these entities protect our freedoms and our rights to own property. And that's what investing is at the basic level. The idea that we know that, because people say, hey, I like real estate because I can touch it, right?
Yeah,
And I
yeah.
go, well, yeah, you can touch it until somebody takes it away from you. And regardless of whether you can touch it or not, it may not be yours anymore.
Right.
And I often equate that to the stock market. You have a deed that tells you own physical property, like a piece of real estate, but you have a stock certificate that tells you own a part of a company. And that is in its very essence, the idea of investing is, and that's why it is so important that we have those rights protected. So thank you,
Yeah.
thank you, thank you.
I would actually add something when you're going over
by all
that.
means.
We're certainly, as a nation, we appear to be, maybe it was always this way, to be more divided than, say, 50 years ago. So on any given day, half the people in this country want one particular thing to maybe go on, and the other half want a different thing to go on, different course of action.
Right.
But we still protect both sides,
Sure.
and that's what makes the market. There's somebody that wants to sell a stock or a bond or real estate. In that example, there's someone that wants to buy it. Those people come to an agreement of, okay, what's a fair price? I mean, all of that really ends up arriving at a price, and it takes freedom to do that, to have the ability to negotiate. It's really pretty cool.
Yeah, no, you're talking about dividing a country divided, and so often it's I think it's less divided than we think it is.
And you know
I
what?
agree.
And I was
I
going
agree.
to say that. I don't think we're any more divided. I think what we have is a 24-hour, 7-day-a-week news cycle
Right.
that no matter where you turn, you're constantly hearing the arguing back and forth and the news media creating this anger about the people. But I don't think we're any more divided.
Yeah.
Yeah,
I think it's just more magnified.
Yeah, there's no question. And there's a chart that I pulled up last week. I was just kind of getting ready to do something. I'm actually going to be speaking about anxiety. Just talking about general anxiety, not even in the investing realm. It's going to be just in general.
Are you nervous about it?
I am very anxious. No, I'm not. I'm really not.
Where are you speaking of?
At church. It's actually I'm going to be doing the sermon, which is really kind of yeah, that should be anxiety provoking, but it's not. But the point that I'm making is how engagement. And one of the things I have is a really interesting chart on magazine sales. Mm-hmm. Not only, and I've talked about this before, how engagement increases when you have negative information, and how people will tune in and so on and so forth. If you have positive information, engagement goes negative. People like, there's nothing to protect myself against. Just hang up here. I don't need to listen to this because there's nothing that I need to make sure that I'm aware of so I can protect myself from whatever eventuality may come my way. Mm-hmm. But the one thing that I thought was really interesting that I found was magazine sales. And they actually looked at the temperature, so to speak, of the magazine cover. Was it really kind of inflammatory? Was it scary? Versus was it kind of a positive image? And you found that when the positive image was there, the magazine sales were non-existent.
Interesting.
They actually, it was really interesting. You had to go real negative in order to get any of these magazines to fly off the shelves.
So if Cosmopolitan says you're okay and you have the great body style, you're just not going to buy that magazine.
You're
to
just not
confirm
going
that.
to. There's nothing you need to do. You're perfect. Billy Joel,
your
says
relationship's
you're just the way
fine.
You are. I think he loves you just the way you are, and and you're all good. There's nothing to see here, folks.
Yeah, I get it.
So, speaking of interesting things, to get scared about, right? we got to transition to something that people are so scared about. Matt Murphy and I were on, and it ended up with a really, really long interview, and it was a lot of fun.
That was a good segment.
We had a blast.
Yeah.
And it was really, really fun being on there. But he got into a conversation. He and I got in a conversation about talking about AI, artificial intelligence. He goes, "Don't you kind of get nervous about this? Isn't it?" And I said, it's kind of like we're going from the Industrial Revolution where we've got physical labor being replaced by mechanical labor versus mental labor that is, maybe sometimes we're using our brains to do things that maybe a machine could do it in some instances. And sometimes it's really bad. I mean, we're seeing some really bad stuff out of that. But, cheating on writing papers and all of that stuff. But at the same token, it frees people up to do other things.
Right.
And we had done this whole thing on the show a couple weeks ago where I went and looked at all these different occupations that you could be in that would have absolutely be very little impact regarding AI impacting those lines of work. And the point that I made on the show is I says, this is why, when we invest, we diversify, right? We want to diversify as well in how we earn income. And we want to make sure that our knowledge, our skills, our abilities, we're constantly gaining knowledge and constantly making sure that we replace ourselves in a way every 5 years. And you were about to say something, Ira, because you just seemed inspired there for a second. What was that?
Well,
I
it's
saw
funny
that smile.
because I was having trouble with one of my printers yesterday at the office and called up and had the service technician come out, and he's taking these things apart and pulling parts out.
Right.
And I looked at him and said, you don't have to worry about AI replacing your job.
No. No, it's so true. Yeah.
And he said, no, but they're making these machines now where the consumer's going to be able to do it themselves. I'm like, I wouldn't even know where
good
to
luck
start
with
to
that.
find that streak in my paper
Right.
and how to get rid of it. What part do I pull out?
Well, it's so true. And like Nick and I, before you guys got here, mainly Nick, he's trying to figure out how do we work these cameras. Because we got these cameras we really, really want to get to the point where we're doing 2 camera on the radio show for the live stream and that type of thing. And for the life of it was just like and there are videos. There are all kinds of AI out there if you want to call videos out there, instructional videos on how to make this stuff work.
Right.
But the reality was forget about it.
So now we call what we used to call YouTube, we call that AI.
But that's what
can
I'm
tell you
calling
what to
it.
do,
Yeah, that's
too.
what I'm saying. I'm calling it a form of it, right? We could go out there and look on the internet for how do you make this thing work, but the reality of it is it's too complicated. There's just too much. So one of the things that I was talking to Matt about, I says it's really, really interesting if you look out there at some of the things going on and how this affects the stock market. And one of the things that I ran into this week is an audio segment where they were talking about something that happened using AI that affected the stock market. And here it is. You ready? Okay, here we go.
Move on to another issue that is certainly or potentially impacting stocks in the stock market. We had a report earlier that there was this AI-generated image of smoke coming out of the Pentagon, fire. It moved the markets, the S&P 500, by 0.3%.
Okay, so number one, this is an awful lot like when the workshop that we teach.
Yes.
About the bombing that
Bomb
supposedly, that actually took us.
Or not a threat,
It was a
just
threat. It was a bombing. You
No,
know,
I thought
they
it
said
was a
that
fake
the White
tweet
House
or something.
It was fake.
Yeah.
But it was fake. But it was the bombing at the White House.
Right.
Dropped the stock market just like that. But then they found out it was a fake tweet, and of course the stock market just jumped right back up to where it was because it was false
In seconds.
in seconds.
I mean, it's,
So, and Matt was asking me about that, and I said, well, that's the idea, market efficiency we talk about all the time. Who is not affected by this? The person that didn't try to go and sell because of some image that they saw, right? Mm-hmm. Who is affected? The person that goes and does this and says, hey, wait, I got to protect myself. And this doesn't have to be an image that is instantaneous. It could just be a report that inflation is, out of control. It could be that the president is going to sign some bill that's going to be terrible for the stock market or whatever.
Well, I think that makes what we do as investor coaches very interesting. Mm-hmm. Excuse me. Because some people think that when we talk about coaching over the airwaves, that what we're doing is we're inviting you to come in and we're going to show you how to do it on your own, when that's actually not the case.
No.
The case is what we're going to do is educate you so that you know what to look for and what to avoid, and we're there to help guide you in the proper portfolio design to just be calm and let the markets do their job.
Well, and you look at, exactly, Ira, and you look at the research from the big companies, Morningstar, Dalbar, lots of companies do this research on investor behavior in stock markets and returns that they've gotten. And by far, it's not, it's behavior. It's, when they rebalance, how they put the portfolios together. And that's all driven by behavior that is driven by emotions and instincts and all of those things. Mm-hmm. And the reality of it is that the biggest determinant of investor success is, research shows again and again, is that aspect of things. And I love it. And I refer to this once in a while. Jonathan, who is going to be in the last hour, believe it or not, is actually, has this thing that he always talks about, and he and I always talk about, is when he used to be operating in our office up in the Goodlettsville office, I would walk by and I'd hear him talking to clients on the phone, right? And I will just never forget the time I'm walking by his office and he's coaching a client to not think about doing something or not try to pressure Jonathan into doing something that was imprudent.
Right.
And it was, in essence, well, how do you do this? And Jonathan goes, it's easy. It's not my money. And I about fell over. I was like, but no, he's right. The reality of it is super emotional when it's your money, and you are going to be far more inclined to go and sabotage things when it's your money.
Right. I say that all the time to clients.
Do you?
That I will not become emotional about the money because it's not my money.
Right.
And that's why I don't look at
It allows you to do
for
the right
the
thing.
record, we do the same thing we teach.
Right.
Yes,
Just to be clear.
That's so true. That is so true.
And
Yes.
we're invested in the same thing we tell our clients to
Right.
be invested
Yeah.
in. And we don't look at our statements.
No, that is so true. I look at the statement once a quarter.
5 minutes.
Now, I'll go on just because of the fun of it. I'll look at what markets are doing in any given day because it may give me a teaching moment.
Right.
But that's all I'm reading. That's the only reason I'm doing it.
So, as they say, this is probably a little bit of inside baseball in the fiduciary world. But, what it was maybe, I don't know if it was the first part of this year,
Okay.
but, we updated our documents.
Yeah.
And so when a client comes on board, we have to disclose this is what we do with our own money. And I'm thinking, and every client that I've said that to,
Right.
Here, because they initial, we're doing the same thing.
Yeah.
They're like, well, I would have thought this is what you're doing. I'm like, we would think you would think this is what we're doing too. But for some reason, the SEC knows that most people aren't doing that. And
Yeah.
it's just really funny. So we have to,
Yes, so true.
This is how we invest our funds too. Okay. That's kind of what I thought.
That's what I would have thought. Well, that was funny because when I was on with Matt, you didn't hear that segment, but when I was on with Matt, that was one of the things I said is that, the study of the Indiana University USC study about the investment advisors, what they did with their own portfolios. But in that particular case, they were not following academic research. And you look at what happened is they were screwing up their portfolios. But it was under the premise, hey, look, we're doing the same thing with our money, Mrs. Jones, as we're doing with yours, and you should be able to rest comfortably. But in that particular case, they were not following the research like we do. And as a result, what ended up happening is the returns were abysmal. And then what they did, which I thought was so fascinating, is they looked at the investment advisors' portfolios after they retired. And what they found was that they were doing the same thing even after they had no incentive from a sales standpoint to say, hey, I'm doing the same thing.
Yep.
So it is funny. But so back to this AI fake images. So basically what happens is there's smoke coming up from the Pentagon in this image, and people are panicking and they're selling, and it drives the stock market down. Here's the rest of that clip.
That day, intraday, it quickly recovered because people noticed that the AI image wasn't that good. They figured out that it was fake. But this opens up the broader question of manipulation of the markets through the use of AI. And it could have been easily somebody spoofing an account saying that we've got news that the FDA is going to approve this drug, which could move a biotech stock. It could be various things. Do you think this is on the radar of the SEC?
No, so, he's saying basically it should be. But here's the point. You look at it. This isn't new. You guys remember getting faxes in your office on which stocks you ought to buy? Uh-huh. Yeah, that's what they were doing. They were trying to tell you, this stock, you got to have this one. This is going to be a really good one. Why do they do that? Because they already own it. And if they can pump it and dump it, as we call it, pump and dump, if they can pump it up and then they dump it after they get you to buy it at a higher price, they've made money.
Right.
Who doesn't get negatively affected by this? People that don't, that actually abide by the academic research that says markets are efficient and you don't stock pick and you don't market time.
Yep.
And the point I made to Matt was if you look at the research, the most recent research that I remember was the Wall Street Journal looking at what percentage of portfolios are actively managed. It's like 87%. Remember that study? It was something like 87%. I saw
Almost
one that was
90,
90.
yeah.
It was like 90 was another one. And you go, is this the exception? No, it's the rule.
Right.
That people engage in this. And most people don't even know it's happening in their portfolios.
Right.
So they're owning stuff and they're going, I'm staying disciplined. I'm not moving. I'm not doing anything. But the investment advisor, the mutual fund manager, not necessarily.
And in that 10%
Yeah.
that don't, quote, in the studies, don't fall under active management,
Yeah.
they may be using index kind of products, but they're still trading those products as if they're actively managing a portfolio. I bet the number is less than 10% of people following a truly disciplined approach.
No, I think certainly. Just when you look at the research, how few people are actually not engaging in that. Yeah, it'd be abysmally small.